Good afternoon, ladies and gentlemen. It's 2 p.m. on Monday, and it's turning out to be a good day as far as Dalal Street is concerned. After two sessions of profit booking on Thursday and Friday, the Nifty has been able to hold back 25,000 as far as the index is concerned, and this is really good news. 135 points higher for the Nifty. The day's high 25,000 is back. And this is really good news because this comes on the back of a very strong move that you see in IT stocks. I'll request the PCR to kindly fire the chart of Infosys, TCS, Tech Mahindra. All of them are in top shape. Infosys up 48 rupees, TCS up 90 rupees. You have a similarly a strong gain coming in on Tech Mahindra, 1.8% higher, and of course Wipro and HCL Tech are not far behind. If you look at the overall index as far as the IT index is concerned, the top performer today 2.6% higher, 36,378 as far as the index is concerned, and of course contributory factors coming in from Infosys, TCS. So this is the star of this particular day as far as the indices are concerned, and we are in the last week of August, which also means Thursday will be the FNO expiry. Wednesday is a holiday because of Sri Ganesh Chaturthi, therefore a truncated week, and a lot of developments lined up. One, you have Prime Minister Sri Narendra Modi visiting Japan and China. Two, you have the tariff deadline coming in as far as the US merchandise exports, Indian exports to US is concerned, and of course the FNO expiry. To discuss this and a lot more, we have Mr. Dhiraj Relli, MD and CEO at HDFC Securities, joining us from Mumbai. Namaste Dhiraj, and a very warm welcome to you on Business Today Television. This is the last week as far as August is concerned, and of course we are through with a bad Q1. What are you telling your Ultra HNI clients in terms of what to expect in September and in the coming months as far as Dalal Street is concerned, sir?
Shailendra, I'm glad to be here with you this afternoon. I won't call this as a bad quarter one.
Okay.
I think the quarter one results were okay, in line with the expectations. In fact, the Nifty 50 companies have given close to 8% growth, so that's pretty much okay. And we are currently in the environment where markets are reacting to the news. Markets have always been reacting to news, but nowadays the activities of a size that the reactions are also warrants a significant reaction. So, whether it is a once in a lifetime kind of an event, like higher tariffs on India, and that too not only higher tariffs in India, but also in comparison to the other countries, we are at a disadvantageous situation or position. So these are the few events on which markets are reacting. But on domestic fronts, I think the India looks to be quite steady, robust, and there are positive news all around. Whether we look at it, the relief coming in from the government in the beginning of this calendar year on direct taxes, and now serious intent from the government to give a relief on the indirect taxes, particularly on the GST sides also. So we have had a decent monsoon so far. That way, I think we look forward to be in a decent position. When we were looking at last year in December end, our outlook for this calendar year, we were hoping that the markets will touch all-time high levels somewhere in July and August. So to that extent, we are yet close to 5% away from that. My take is that leaving all headwinds behind us, we are well poised to touch all-time high level in next 2-3 months' time.
Okay. So I think that itself is a good positive hope that 26,200 on the Nifty should be breached according to HDFC Securities. Let's analyze this in a bit of detail, Mr. Relli. This obviously will happen once corporate India starts to perform, because markets rise because of better profits, higher sales, and of course, liquidity. Do you think the steps the government is taking in the last 15 odd days should release some kind of animal spirits in corporate India over the next 2 odd months?
If you look at it, how Indians markets have been doing, I think they have been responding to the government action, whether it's on the industrial side, defense sector side. So whichever sector we've seen, the government have been pushing, including the PSUs, have done well in last 4 or 5 years. India, by and large, have been a secular consumption economy.
Yes.
Consumption never have been a big challenge for us because we are a populous country and population growth, demographic dividends, young country with aspirations. Consumption was never a challenge. But in last
Yes.
couple of years, we've seen a relative slowdown in the consumption and seen the pain in entire consumption sector, more so in the rural and urban space. So, to that extent, it warranted a massive action from the government to kickstart or boost consumption. I just mentioned that they gave some direct access relief in the beginning of the year in the last budget, and now with clear intent coming in from the Prime Minister that there will be a revision in the GST downwards, which should fire some kind of a animal spirit in the India, and we'll see a significant uptick in the consumption in the second half of this fiscal and definitely in the next fiscal. So it will come with some lag. It won't come immediately, but it's very much positive. Coming to your question on animal spirit in the in India incorporation, I think it will take some more time. The promoters, entrepreneurs invest in capacity when they see the decisive demands. Unfortunately, they've not been seeing the decisive demand growing, and that's where they were operating at 80% plus minus capacity in most of the sectors and not investing in the capex to increase the capacity, and that's where the animal spirit is yet to unleash. But my take is that once we see a significant growth in the demand, somewhat animal spirit will come. My take is that now its onus is also on the states to do more. States haven't done their contribution, so states can reduce stamp duty, they can reduce the you know some of the car vehicle registration taxes and so on to unleash the animal spirit in India.
Yes, I think the government on its part has done a lot of piecemeal moves. In February, we had the income tax bonanza coming in for individual taxpayers. Then you have this GST rejig that is happening. A lot of other reforms are also in the pipeline, as Prime Minister Narendra Modi has reiterated over the Independence Day speech as well. And of course, that 100 basis point cut by the RBI. Now we have a good monsoon and of course pent up demand. Mr. Relli, when you look at the consumption basket, where are your bets on? As you mentioned in your previous answer, that this is not an issue that we've been worried with as far as the broader economy is concerned. But what now? Where would you divert this, whether it's spending power, whether it's pent up demand over the last 4 months into the next 2 or 3?
My take is that staples won't see significant upsides. It's a quite well penetrated market, and in last few years they've been seeing challenges on the volume growth, and they whatever performance they could able to deliver on their earnings was largely coming through the premiumization. I think premiumization story will continue to and that will help the staples, but it's not a case for a re-rating for staples. But low cost discretionary is one area where we think that it's a candidate for a re-rating, and not to for a next 6 months to 1 year time. It would be for 2 to 3 year or even a long term theme for India. When I say low cost discretionary, it includes your hospitality related spend, which includes travel. It also includes your healthcare and of course consumer durable as one space. So it's good for in a way airline industry, hotels industry, diagnostic, healthcare, hospital side. So we will see. And top of it now with the festive season kicking in with the Ganesh Chaturthi on 27th. So we will see, the consumption will increase, and I hope that on 3rd and 4th September we'll see some action from the GST Council on reduction of GST so that it can boost consumption faster.
Dhiraj ji, in which part of India is travel and healthcare now in the lower strata of consumption in terms of cost? दोनों के रेट इतने बढ़े हुए हैं, होटल में जाइए, there is no room available below 12,000 in a good 5-star. Healthcare though is become so expensive that you really fear going to meet a doctor in a hospital. Of course, hospital stocks are doing very well, but point taken, yes, these are very good stocks that are moving. I'll request the PCR to kindly fire the chart of Lemon Tree Hotels and Royal Orchid Hotels. These are mid category hotel chains which are doing extremely well on Dalal Street, both of them at record highs. Lemon Tree at about 168, 169. You can just see how it's performing. And of course, look at Royal Orchid Hotels. This is also in top shape. About 487 was last I saw. Yes, the stock had actually climbed above 500 on Friday, but a very sharp move coming on this side as well. Mr. Relli, in terms of healthcare, what is your preference? Are you going towards hospital chains, diagnostic stocks, or maybe some mid-cap pharma on the CDMO space? What are you advising clients?
See, hospital space is a structural story. It is not just about the consumption or affordability or affluence in India. It's also got to do with the medico tourism. It's also got to do with the increasing in penetration of healthcare insurance also. So, culmination of all these things will continue to drive hospital sector, and we are also seeing that there has been a consolidation in the hospital sector space also, and lot more is possible also. A lot of small time hospitals are also doing well. Some of them have listed also. So there we see that there is a scope for a consolidation also. So it also will leverage AI to optimize the productivity also. So to that extent, it's a structural theme, not just about next 6 months or a 1 year only. Of course, some of the hospitals are currently trading at a higher valuations, but my take is that healthcare in the hospital space is a structural theme, and we like this theme, and we believe that this will continue to do well. India will attract a lot of medico tourism also. We are seen as one of the preferred destination for affordable healthcare also from neighboring countries and so on. So to that extent, it'll do well. We've also seen that there is a certain section of society which is very much conscious on the well-being and wellness. So to that extent, they are going for a regular health checkups, and a lot of corporates are also taking initiatives to drive the better health for their employees and so on. So we believe that diagnostic is another space which will continue to do well. Again, here also we are seeing consolidation happening, and CDMO space or CRDMO space, I think they are very specialized space, and right now they are operating at a higher valuation. So let's wait and watch for some time.
Yes, fair point. A lot of hospital stocks, I'll request PCR to kindly fire Apollo Hospitals record high, fabulous performance in Q1. I think profit after tax rose 42%, top line was up 15%, and lots of other products in the pipeline as well as far as Apollo Hospitals is concerned. Mr. Relli, your view on IT stocks. We've had a terrible July, and August seems to be a space where in the last couple of days you are seeing some value buying in IT. Today the index is also up 1,000 points. Is this something on your radar in terms of contra play, in terms of buying deep value, in terms of maybe buying dividend paying, debt free, fabulously managed IT companies?
See, smart money has a habit of chasing the value at right times. So, what we are seeing right now, the smart money is going for beaten down sectors like IT. IT hasn't done well, and they've had their challenges in terms of growth in the revenue, as well as they are seeing margin pressure also. But we all know that these are very well run companies, jewels of India, I would say, and they know how to pivot well also. So, cloud or cyber security or leveraging the large ticket AI related project implementation across the world, going beyond US and exploring other markets are really a big opportunities for these companies. And my take is that, this sector has already bottomed out. From here onwards we'll see an improvement. Of course, the knee jerk reaction like today, etc., will give you a 2-3% kind of upside, but it may correct also in next few days also. And but if you look at as a 2-year 3-year theme, my take is that you should start increasing your allocation on some of the good companies in IT space, particularly in a mid cap IT companies. I think that's where you will see a significant upside.
Okay. Mid cap IT is what you prefer. Fair point. And mid cap IT has actually delivered very, very smartly. If you look at the long term charts of Coforge, persistent emphasis, very strong double digit returns over the last 5 years or so. Uh, this conversation draws to a close, Mr. Relli. Any advice that you would give to retailers how to sort of navigate markets from this point of time, and anything that you would want to discuss in terms of shift in focus that the government has pivoted over the last 3 weeks or so?
I think clearly government is not perturbed with the tariffs. They are dealing with it. They are navigating it. I think it's only a temporary phase and probably used as a negotiation tactic also. We are all hoping for that matter. And I believe that shift on a driving consumption in India is a very, very strategic move and a good move from the government side also. And this would drive the economy to grow upwards of 6.5-7% GDP growth. I think the challenge we are having is that we are at a low inflation right now, and though RBI front ended the rate reduction, we should get some more rate reduction. So interest rate sensitive sectors will also do well from here onwards. One has to start taking position in the interest rate sensitive sectors like real estates and also NBFCs and few large private banks, and also a large state bank also. So my take is that continue your SIPs, increase your SIPs if you can, and stay invested in the market for long term benefit. Stock market will definitely give you a return in a 3 to 5 year horizon, good returns. So continue to stay invested in the market. You should look at the SEBI registered investment advisors only for guidance. Don't try to invest in a penny stocks and try and hope that the money will double in days and months.
On that very wonderful and somber note, Dhiraj, we'll call it a day. Thank you so much for joining us at the start of the week, and it's turning out to be a great day so far. 25,000 on the Nifty, and let's hope, as you mentioned in your opening comments, we see a record high on this particular index fairly soon over the last over the next 3 quarters or so. The record high was 26,200, the one that we saw in September of 2024. Let's hope Diwali is a good one. Thank you, Dhiraj ji, and the very best to you. That, ladies and gentlemen, was Mr. Dhiraj Relli, MD and CEO at HDFC Securities. A nice triple digit gain on the Nifty today, fired primarily by a very, very strong move in IT. The IT index is up 900 points, 2.5% higher, and is the top performing index for today. Remember, in July it had fallen 9%, in June it was negative, and in August we now see a 3% uptick on the Nifty IT index, of which 2.5 has come in today. Thank you for watching. Let's hope we have a close above 25,000 today, which essentially means the next this week would be on positivity.